2019. My name is Alejandro Zambrano, Chief Market Strategist with ATFX.com. We're going to take a look at the market. Some interesting stuff coming out overnight. News from China lifting the Aussie dollar, and we also got some big moves in the New Zealand dollar versus the USD, which we also going to take a look at. But before we start, though, as always, I need to stress the trading financial markets, unfortunately, is high risk, and we may lose all of our invested money as well. I'm going to provide you guys input on the markets. I'm going to share with you guys what I think is relevant for the market and which levels I think are relevant. But this is made with an educational purpose and not to be viewed as buy and sell recommendations. Now, if you don't know, ATFX is a great broker based in London, but obviously have offices around the world. We're regulated here in the UK, have offices in Dubai, Hong Kong, and mainland China. In fact, we're one of the bigger brokers in China, and now they're trying to start up and do business here in the UK and in the rest of the world, really. So if you want to know more about them, check them out. There's a good reason why they're one of the bigger ones in China, and the reason for that is that they have very, very good spreads and very, very good execution. So you can check that out under ATFX.com. If you're in the UK, you go to the UK website, and as well if you're in Europe. Otherwise, if you are in other places in the world, you can go to the international site where you have access to different, because of regulatory setups, different leverage and so on. Okay, let's begin, and we're going to take a look at the euro, and the euro is going upwards. So I made some adjustments here, because you might remember yesterday I said to you guys I suspect the market could potentially bottom out down here. I think I said 112.70 or so. However, we missed that little entry point with, I think, 5 pip or so. So what I've done now is that I have pulled up the trend defining level to 112.90. If we revisit that level, I suspect traders might look to get involved, and the trend will be bullish above this level here, which is the low here from April 11th at 112.48. So I'm gonna continue to be bullish. It's just that I've reduced the trend defining level. It was here, it's now here, and I bumped up the buy zone a bit because we missed out on that. So if we do come back, I think we could potentially go upwards. Now, we had some data coming out from China overnight. So I'm referring to Chinese GDP. Now, the GDP figure was slightly better than expected at 6.4% year on year versus the expectations of 6.3. But that's probably not what is moving the market, because it's not a big move. And as well, there's a lot of talk and mention that those GDP numbers anyway are heavily manipulated, so people don't really trust them. And then we have industrial production. Now that's sort of important, and industrial production in March increased by 8.5%, which obviously much better than the 5.9% anticipated. And that is why we're seeing, for example, the Aussie dollar being up the way it is. And today, let's take a look at the Aussie. So this is the Aussie, and the market here is, if you look at from a daily chart, it's been stuck within this descending triangle for quite some time. And if the market would have traded below 69.79, I would have shorted myself, because you have a nice set of lows here. Taking this out would have actually marked a decline of about 325 pip. So it probably would have touched that flash crash level and then continue to trade lower, maybe to something like the 65.51 level. But we're not there right now. Instead, the market is going upwards. And if we take out the February 27th high, most likely we could trade to the next high, which is the January 31st high at 72.99. However, though, let's not get too enthusiastic. Why? Because the pattern here itself is a big triangle, and trading triangles itself is usually bad for business unless it's a really, really fast moving market like cryptos and we're in a strong trend. Otherwise, what tends to happen is that nothing really happens, and the market really sort of goes quiet on you after that breakout, goes up a little bit and then goes down. But today, of course, it's slightly different. Why? Well, because you have those GDP numbers and you have industrial production from China, then you have trade wars, which is causing the market to be more upbeat than usually. So I'm not going to be trading this breakout, but I assume that scalpers and alike will probably try to trade from on the break to the February 27th high and probably try to ride this potentially upwards towards the January 31st low, sorry, high at 72.99. The trend will remain bullish as long as trade above 71.38, which is this low here from April 16th. What else? Yes, GBP versus the USD. So this market is sort of going nowhere anytime soon. And the trend remains bullish, but the problem is this. It doesn't matter if wage growth is really strong and unemployment rate is so low. The UK and Bank of England is not ready for a rate hike. They're just waiting for what's going to happen with Brexit. Now, things have already happened, and we're not seeing huge investment in the UK. Instead, we're seeing unemployment rate low. And what's interesting here is that people are saying instead of investing in machinery that is going to improve productivity in the long run and make us more competitive, or the UK more competitive, they're investing in people, which again definitely allows them to produce more. But you need the right combination of hiring people and buying machinery and investing in plants and things like that. There's very little investment in plants and machinery right now. But instead, people are replacing that, or companies are replacing that by hiring people. Anyway, it's a bit of a dilemma here, and I think the Bank of England, the way they are looking at it, they probably want to wait and continue to wait, especially now as inflation is just under 2%. I think the last reading was 1.8 year on year. So there's no real rush here for them to raise interest rates. And from that point of view, I'm actually neutral on GBPUSD from a macro fundamental point of view. From a trend perspective, though, we're still in an uptrend, and as long as you're about 29.50, this is a bullish trend. And if we take out 31.25, then we're probably going to start to see this trade upwards. A bit like the EURUSD. You might remember it was caught here, and then I said that on the break to 12.60, we're probably going to start to trend upwards. Same sort of behavior. Right now we're down here. The same sort of analogy for GBPUSD. Okay, dollar yen is really unmoved, and there is action, but obviously not here in this specific pair. There's no change to the outlook here for this market. The trend is bullish by 110.81, and I think we can probably go down, but then probably upwards. As for gold prices, big move yesterday. So the market, you can see this pattern has been carved out for many months. This is the January high. This is the February high. This is the March 25th high. So you have massive head and shoulders here, and you could draw this trend line here to give you the neckline. The difference between high and low is about $66, and we saw the beginning of that decline yesterday. Obviously, it could be a false move, but as long as you trade below the high here of yesterday, which is on this specific chart, 1288.63, then this trend is going to be bearish. From a risk reward ratio perspective, you're looking at a 7.19 times risk reward ratio if we drop all the way down to the head and shoulders target. So this is a very, very solid and interesting setup, and I'm personally hoping that it's going to decline. It's always good. These sort of setups, you get a few of these a year, and that's sort of what sorts out to you for the whole year, really. All right, crude oil prices. So crude oil prices, they really refuse to trade much lower. They are at these target level areas that we discussed over the last few weeks and months. And I don't really want to be buying here. I'm still looking for that pullback. But if we take out 64.77, most likely we'll trade a little bit higher. So obviously my preference is to be long, and I think scalpers will try to potentially get involved here and probably be bullish above this low down here. I am, however, not going to chase this market. The best ideas was actually much lower, not right now where we are trading. Sorry. This is the S&P 500, and you can see here that yesterday, well, in the early morning, we actually reached the target, the head and shoulders targets, which we shared with you guys last week. The market did try to move lower, but didn't really revisit the breakout point. And here again, it's much like crude oil prices. This is not the time to buy these markets. There are better markets. In fact, go to the ATFX YouTube page. Actually, you are already on it. So don't forget to subscribe to this video, okay? And to the channel. Because, let me see here if I can actually find my channel. So I did a video yesterday, this one here, and it's called DAX 30 at new 2019 high. Will the Russell 2000 follow? That's where you want to keep your focus on. If you missed that DAX breakout, if you missed the move up higher in the S&P 500, obviously this is not like a silver bullet. It's gonna guarantee you profits in any way, but that's really where my attention is focused is at. Every day we produce a video called Front Row, which is produced here in the lobby of ATFX offices, and then I do these morning webinars, which I'm hosting with you guys right now. Here I try to share content and things that I have not covered here, and sometimes try to take a deeper look into something specific. And that is the video you want to look at, and you definitely want to subscribe to this video. 93 subscribers, but as you can see, some of the, I mean, there's usually more views. Well, not always, but there's in general, like here, for example, more, almost pretty much same number of views as subscribers, but that should actually be the other way around. Now let's take a look at S&P then. Okay, we can buy that dip if we go down, and I want to be bullish about 28.72. But the Russell 2000 is where I will be focusing on. As for the German DAX, the trend is bullish above 11,850, and I think this market can go higher without a doubt. However, again, if you didn't buy on the breakout here, I think it's or on the pullback, it's a little bit too late. I do remember we think we missed that pullback, didn't go deep enough, and then we've been missing out here as well. On the other hand, if you're long, obviously very happy. You now in a position to reduce the stop loss to the low. Maybe you can book a bit of profit here and then look to get involved at a pullback at the 11,972. This setup here as well has been really good for a long time, or since I introduced you guys to it. It's a risk-reward ratio 4.89, and obviously with Chinese figures coming out stronger than expected, people being enthusiastic, it wouldn't surprise me if we can go higher. As for the head and shoulders target itself, it suggests we can go all the way to the highs here. Finally, I forgot actually to mention, yesterday the German SEV index, so ZEW, rose. I think it rose slightly, turned positive. I think it's the second time it has sort of gone from less negative and now finally positive. Tends to have a bit of a lead on the PMI indicators, so that sort of tells us that most likely Eurozone data over the next month or two, it's probably going to be slightly better than has been in the past, which is not really that strange given the way how stock markets have bottomed out here. Okay, let's see here if you guys have any questions. Let me see here. For some reason, when I do these, the chat disappears. Not really sure why it is like that. Yesterday the chat was available, but not right now. Gonna try to open it in a different window. Yeah, they have some funny restrictions here at on these computers here. It's unfortunate I can't actually see if you have asked me any questions. Okay, I think we're gonna wrap things up. I can't actually see anything if you're asking me. If you do have questions during the day, then reach out via AlexFX00, and I think that's the best option. And as well, if you have any questions, any questions about AlexFX, I do publish a lot of content here, as you can see, and so check that out. And as well, if you have any questions about ATFX, you wanna pay less for your spreads and things like that, then reach out to me as well, and I can put you in touch with the team that manages that. Have a good day, guys, and I'll see you guys tomorrow. And sorry, I can't unfortunately access the chat. Thank you, and bye bye.